Thanks for watching Workspace Real Estate. This is James Robertson. Today we're going to cover a topic that a lot of clients want to know about. It's how do you know if you got the best deal? In other words, do you think you have the best deal possible on this brace? Then prove it. So I'm going to explain how clients should use real estate data to prove the highest and best use. Here are a few data points that you should use to make sure that you're comparing options properly. First off, we want to look at the gross rental cost. I'm going to show you guys how we use tools to compare that in a minute. We also want to look at your total improvement cost as well. We want to look at free rent as another factor. The status of capital improvements, which is not covered in this worksheet, but it's something that's very important. Additional rent cost, whether it's a gross rent versus triple net, and the possibility of a sale, are just a few of the things that you need to look at that will affect the overall value of a deal. When it comes down to it, it's all about the dollars, and we're assuming that all of your options fit the parameters that you need them to fit. So to start things off, we're going to fill out this form. For the purposes of today, this is actually a client deal that I'm working on. It's a retail deal on Westheimer, and this is a coffee shop that wants to be put there. They're looking for 1,800 square feet. The start date would be probably in January. So we'll go ahead and bump that up a little bit. Actually, when you account for permitting, they're actually going to be closer to April 1st. I'm going to shift the dates here. We're going to assume a 5-year lease. The starting rent is going to be $12 a foot, 3% escalations. This is where we project for inflation or any other factors that may affect the soft cost of rent. And for free rent here, we're going to go ahead and assume that we can get 4. Now that can change, but that's kind of where we are now. Percent rent, we're not doing that. And this is a triple net deal. Now, a triple net deal versus a gross lease, a lot of people have questions about that. I've done a video about it, but a triple net deal is basically describing the pass-through cost. Common area maintenance, taxes, and insurance on a triple net deal are separate. And you can see here, operating expenses are $5.50. That means that this particular property has common area maintenance, taxes, and insurance that combines to equal about $5.50 per square foot. That is added on top of the $12 a foot rental rate. If you had a gross lease, then this number would already be included in the rent. So the gross rate for this would be $17.50, $5.50 plus $12. Now here's another big factor. On a triple net cost, because it's passed through, it's much more difficult to cap additional rent expenses. So when you're dealing with a gross rent deal, we usually have an easier time on pegging a rent rate and locking it in. And if the additional rent costs go up unexpectedly, the owner eats some of the cost. That's why gross rental rates are more popular. They're easier to understand, and you're not hit as directly as with a triple net deal. Unfortunately, for a lot of industrial and retail spaces, triple net's just the way that it is in this market. Now, as far as the discount rate being 6% global inflation, I always keep that as pretty much a standard here. So we're going to go ahead and take a look at the numbers to see how this really fills out. So here's a great report that I tend to look at quite a bit. It's the proposal cash flow. I like starting from the back and working our way forward, right? So when you look at cumulative cash flow on this particular deal, this client's going to spend $196,000 approximately to get this space over a 5-year term. That includes all cost, including tenant improvement cost. That includes your projected inflation. Okay, so this is what the outlay of cash should look like over a 5-year term. When we work backwards from this, we can see that the total rent for this space starts out at about $24,000 a year, gradually increases to about $35,000 a year, right? And as far as your tenant improvements, we estimated that the tenant improvements here, which, let's see, where would that be in this form? The improvements here are $20 a foot. Now the landlord's going to contribute some of that cost. We're estimating about $10 a foot. I know that's what they usually get for this property. So that leaves us with an additional $20 a foot to get the build out we would need for a restaurant or a cafe type setup, which is usually a little bit more expensive. So we're going to outlay about $36,000 in year one for those improvements. Now, there's a couple of ways we can slice this. We could get the landlord to eat some of that cost. That's something we'd have to negotiate. We can ask for free rent so that we can actually absorb some of the cost that way and soften this if we want to. But this shows you where we stand right now. Over 5 years, you're paying 196. Okay, you're paying about 36,000 in improvement cost to get what you want here, and this shows you on a year-by-year basis what you are paying for. I really like this chart because it shows how our expenses play and also the step increases with the base rent. So when we look at the over a 5-year period, you know, the base rental rate we're assuming is staying at $12 a foot. That's very uncommon in retail. Usually we have about 25-cent bumps, which we can adjust if we need to, but this is where the deal stands right now. You know, we have a very small percentage in the step increases. That's pretty much accounting for that 3% inflation that we accounted in the equation. And you can see total expenses in green. The reason that yours in year one, the reason you have these 4 months, that's your free rent where you're just paying for expenses. So this kind of gives you a visual perspective of where your money's going. So if you're looking at this and saying, okay, well, I see the outlay of your projections, but how do I know if I'm getting a great deal or not on this property? Here's one quick visual representation that we use to show clients exactly where they stand. So let's take a look at the history of a building. You can always tell by looking at the rental history of a property where their parameters are, assuming that you have the same owner. If you look at a 4 or 5 year period, if you can get a 10-year period, that's even better. You can see what the advertised bottoms are. For many brokerage firms like ours that have been doing deals here for a while, we have our own history that we can add to add additional data points. I can tell you in 2012, there were deals done below 14. It's just that these are the rates that they were asking for. So most clients don't have access to this information already. But if they were just to compare the asking rates, that's like looking at the asking rate of a car. It doesn't show you exactly where they are. It just shows you where they want to be. So if we look at a 4 to 5 year time span here, this shows a lot of great information. So the orange is our property in question that our client's working with. You can see that they were at $17 a foot before 2012 and then dropped this to $14 a foot. Okay? And that coincided with the market as well. The green here is where the West Chase retail market was going. So there were problems here where people were moving and they had to soften the rates across the board. So you can see that Houston was already below, with the average retail for Houston being at about $14 a foot at this time. West Chase was obviously priced a little bit more, and our property on Westheimer here was matching it accordingly. So 2012 happens, boom, big drop. They go from $17 a foot down to 14. That's very significant because they stayed there for years. So from 2012 to 2015, they had a $14 asking rate, while at the same time, Houston started to outpace as far as rental rate. That's the yellow line. And you can see the green line here at West Chase was kind of far outpacing this property, close to 2015. So just recently, you see a pickup here in 2016 where they started picking up the rates. Now, what does that show us? For this particular property, because it's the same owner, and we know that because we know the market, I know that there is a lot of flexibility here on what they can charge us. Now, I can tell you originally, we came at first, they were charging us this higher number. We haven't even finished negotiating, and we're already down below this number. Okay? So that's indicative of, you know, just because they're raising rates, it doesn't necessarily mean that their bottom line has changed. They're just going to try to match the market. And this is where we save people a lot of money. If you understand the history and you understand where people can go, then you can push for it. Now, it's not just as simple as saying, well, you did this before, do it for us. It's a lot more involved than that. But I want to show you guys a few other numbers real quick. So let's try to look at the vacancy rate here and see if that tells us any interesting tidbits. So we can see that the vacancy rate is high for that same period that the rental rate was holding stable in the last slide. So we know that this building was working hard to increase their occupancy, and they did right about the time that they raised rates. So we know that they're more confident in their position. They're really healthy with an 8% vacancy rate. That's very good for retail here. Once you get past 90% occupancy, or once you get less than 10% vacancy, landlords start thinking about swapping tenants out. Who do I want that's better? Obviously, my property's in demand, so they're much harder to negotiate with. These guys have reached that point here where they're very comfortable. We know they are talking about getting another big box here. They have a great tenant mix right now with several other restaurants that are all doing very well. So I know this property's confident. The vacancy here shows that too. So let's see if we can find out any other information that can help us find out where this building's going to be at. Well, we know the sold price on December 2004. It was sold for about $10 million or $147 a foot. It has a cap rate of 7.6%. That's very important because since this is an investment vehicle, you know, the value of this property is pretty much based on cash flow. We know what drives that, and we know how important it is to achieve certain rent levels. So that's important for us to figure out what a bottom's going to be here. Now, let's see if there's anything else we can see on this space that'll help us out. Something else that's a help to us is knowing the true owner being Unilev. These guys own a lot of properties here. They're very experienced. They're going to negotiate deals like many real estate investment trusts. They have a process and they have certain metrics that they know they want to meet. The good news about properties like this is that volume is important. They want good deals, so they're going to negotiate differently than an individual owner in this way. They're going to look at a deal. They don't have to squeeze all the juice out of the carrot before they pull a trigger on something. If it's a win-win situation, or if it's profitable and barely meets their standards, they're much more likely to pull a trigger. Whereas an individual owner is going to have a lot more emotion involved into a deal. They're going to negotiate harder, and they're going to take a little bit longer to do something. The fact that they're large as well, and that they're a real estate investment trust, means there's more capital to help on improvements. There's more flexibility, potentially, on getting free rent. There should be less flexibility on negotiating some other concessions on the lease itself. But overall, this group is great. It'll be great negotiating a deal with these guys because they have the flexibility and the capital to help us move in as we need it. I'll tell you something that happens in spaces like this for individual owners. Let's say that you had a much smaller strip center where this is broken down. Let's say this just pie slice here was owned by a single person. A lot of retail guys that own or occupy spaces don't have the capital to help other people move in. So what ends up happening is they'll get tenants that need 5-6 months free rent to cover the cost of build out. That reduces the amount of good businesses you can get in, especially if they're locally owned and managed. For, you know, like a Village Cleaners, that's probably a local guy here, you know, a baker shop. Guys like this, they're here because they can go in and get some money from the landlord to help them get started. And so they're not using all of their cash just to move into the space. That's what makes these type of spaces very, very attractive, as opposed to these smaller spaces that just don't have the flexibility to offer the tenants that kind of capital. So overall, I want to share with you guys that when we're comparing and proving that this is a good deal based on the market, the slides where we looked at the rental rate show you without a doubt that this is a very, very strong property. So this is the one slide I want you guys to have etched in your minds. Why is this a good deal? Because it's below market. Well, how do you know it's below market? Because they're listing this at 14. We're actually negotiating below this number. The market is much higher than this. And so the delta between where the market is here and where we actually are, that's the difference. So that's the proof that the rental rate is below market. As far as improvement cost, they're in line with the market because they're offering about $10 for a second generation space. Those are data points that we have from our experience. As far as abated rent goes, the market average is about 2 to 3 months. At 4 months, we're doing really good there. As far as status of capital improvements, we didn't talk about that in this post, but the parking lot and the roofing, the fact that they're a real estate investment trust, they usually hold on to these properties for a long time, which is good because that reduces the amount of capital improvements you see with people coming in trying to flip properties by doing all of these improvements and then charging the tenants for that difference. So based on the metrics that we talked about before, this is a steal. It really is. For this coffee shop, if the demographics work, which they do, they're going to come in well below market. And just to put a capper on this, I'm going to show you guys the actual difference, okay? Okay, so we're going to zoom out to the map view and we're going to look at our property that we've been working on here, 10928 Westheimer, because we want to make sure we got the best deal that we can get. So this is our property here, 10928 Westheimer. There you go. So typically, because this is retail, we're going to focus on all the spaces that could possibly work that are retail. So I'm going to do what's called a corridor search. We don't want to be on, well, we can go this far in Westheimer. So I can take a search here along Westheimer, about a 2-mile radius here. Okay, and that's going to show me everything that's on Westheimer. So I'm going to continue, and let's say that my client will be okay with being on Willcrest as well, because that's also a heavily trafficked street, passing through Richmond. Other good strong retail. Okay, so we got about 21 properties here. Now, for the sake of this search, the Beltway is not going to be the best option, but you know what? I'm going to put it on there anyway, just so we can have it to compare. We're going to pick all the major corridors, and I also need to do Richmond. Same distance. These are all places from a retail perspective are strong streets in a strong market. And this will give us a great snapshot of what we're looking at. So, all right, we got 42 properties here. So let's go ahead and take a look at what the market says about these properties. From a rental rate perspective, I'm going to sort these by rental rate. So the ones that are withheld, like these, we're going to have to call in and ask. Some of these are not really retail, like you have an office building here. That's why you have to kind of sort these before you kind of seeing this live. So let's go ahead and start where the rental rate's actually listed. You know what I forgot to do? I forgot to narrow this down to retail. Okay, so we got 9. That's why we had all the office stuff coming in. Without the retail filter, there were 42 properties here. Okay, but once we put actually retail, now there's 9. If we put the space that we're looking for, because we would take about 1,500 square feet to about 2,500 square feet, that narrows it down to just 4. So for the size that we're looking at, there are only 4 properties that are listed that will actually fit this parameter here. Because that's so small, I want to expand this even broader. Okay, so I'm going to take this bigger, and we're going to do a 3-mile radius. Now there's 64 properties that fit. Okay, so let me clean this list. We want existing properties only. We don't want new construction yet. We want to make sure they're retail. Perfect. Okay, so we are at, I told you guys, less than $14 a foot. But we're going to leave this open for now so we can see what we come back with. First thing I want to do is see what properties fit the size range, which is here, but also the rental range that we're at. So let's go ahead and assume we're going to say from $11 to $15 a square foot per year. Okay, so this is everything from $11 to $15. There's 18 properties. Let's take a look at what you get at this rate. Okay, so this is a property on Wilcrest, very similar in age and look to what we're looking at here. Let me zoom this out so you guys can see it. Okay, so these guys, now this is Harwin and Wilcrest, not as strong of a market. You know, I did push it out a little bit, so that wouldn't work for us because of the location. 12320 Bel Air. Now this has a big end cap that's too big for us to actually use because we're only looking for about 1,500 to 2,000 square feet of space. There's a lot of vacancies here, it looks like. That wouldn't be attractive for us. There's no big box here as well. That's not going to work. It's not comparable. This is another one, largely vacant. There's no big draw. We couldn't put a coffee shop here. It's not comparable. And it's on Cook Road. Another great example. Nice looking place. There's a Frenchie's on the corner, but there's no big box, no draw. Parking would be limited here. There's a couple of inline spaces, but that's not comparable to what we have right now. I wouldn't use that as a comp. Now here's 1905 Derry Ashford. You have a tax office on the corner. No big box here in the spaces. Much older looking development, very limited parking. This definitely couldn't work for us. Now what I'm doing here is I'm showing you prices that are close to what we have, but they offer so much less than what we're getting with this other space. That's part of verifying in the marketplace whether or not you're getting the best value. And it does take some time to learn this. Now this type of property here, newer development, which is great. Lots of local tenants here. This would not be a good place. There's no big draw. There's no big box. You want a H-E-B or a Whole Foods or a Kroger's if you can help it for a restaurant type store or a cafe, because that's going to help you with residual traffic. Here, you're on your own. You got to draw on your own traffic. And these guys are probably paying a premium too, just to be here because it's newer construction. That wouldn't be a fit for what this particular client wants to do. Okay, here you got a Radio Shack, that's good, and a Family Dollar, which is also good here. The rental rate is $11 a foot plus triple net, so it's very comparable to what we're looking at. So let's see, the big box, it's not that good. China Seafood and Restaurant, that's okay. H&R Block, yeah. You know, jewelry store, you may have some theft problems. This is more of a cultural center. Our particular cafe would not work here, but this is slightly better, and it's a great value for a different type of tenant, just not ours. Now this looks like is it a two-story? Let's take a look at this. Okay, very unique design here. You may have some ADA compliance issues with these steps. Parking seems to be limited as well. No big box, right? So not a lot of parking either. This would not be something that would be comparable. I'm going to have this list available. Just contact me to get the full list of these options if you want to go through yourself and see them. But now this is a two-story space here, which, you know, curb appeal is not bad. Fast signs on the corner here. Second floor retail never works for this type of end user. They're going to want to be on the first floor. The fact you have a nail place, a nail MD clinic here, this wouldn't be an attractive space for a cafe. It just wouldn't work. Now this is the property that we're considering. And let me show you guys the difference here. So you have a big box here, right? You have several hundred parking spaces throughout. Curb appeal is is decent. It's not going to be Class A great, but it's just tremendous value. You have a Dollar Tree and an Office Depot to draw in people. You have a Lens Crafters, which is also another regional person, right? Which is always great when you have larger tenants. They're going to bring in people. Another national or regional tenant here. Okay, so you see Village Cleaners, which is nice. Now you have restaurants on this side as well. And you can't see it on the other side, but there's several other restaurants and food places that are directly across. You have a Walgreens, which is extremely close proximity. These are things that all make a huge difference. A huge difference. You have your fair share of local tenants, but these guys benefit from the traffic from all of these regional people that are here. Now, this is, again, you see the Dollar Tree and Office Depot. Now, this is why I'm telling you this is an exceptional value. We're getting a deal at the same rate as a property that we saw earlier that we wouldn't look at twice. Okay, when we look at overall value, this space has more traffic that'll flow through here because of its location. It has a better curb appeal than all the other ones we saw in this area that were this price point. It has the regional tenants that are here. They have more build out allowance. I know that from my experience in dealing with these type of tenants, these landlords. Those are just a few factors. And if we look at the actual numbers, you know, if we were to compare what these guys are offering to other properties that are like this, you're going to see that it's much, much higher cost. Let me try to pull that so you can see it. Okay, so we're going to go back to the map because we want to look at everybody else. So let's say we look at everybody else from $15 a foot on up. So that way we can look at everyone else we did not see. And those are a lot of properties here. So let's take a look at what the more expensive options are talking about. I'm going to sort these by rental rate so we can see what the most expensive properties are doing here. Okay, so this property is on Memorial. This is $33 a foot plus triple net. So this is about $42 a foot overall because of location. And this is all about location because the parking here doesn't compare, but it's a great location. Now, I don't think that, believe it or not, I don't think that a cafe would benefit as much here as they would in the other location because of the other restaurants and the big boxes that draw in people. So you're paying more money here, but I think you'll benefit more being just as close but near a big box. Let's try to pick another one. You know, as I look through these and you work your way down, our option has a big box there. It's got a dollar store. It's got an Office Depot. Now, when you look at properties here that are $33 a foot, no big box there. $27 a foot here. You know, no big box there. All local tenants. 9,200, no big box. All local tenants. That's at $26.59 a foot. Bel Air, no big box, no big draw. This one's at $26 a foot, almost twice as expensive. This one at Memorial Center, $26 a foot. Okay, no big box, all local, not as much parking. When you look at these, you can really see for this particular client, and I have to say again, for a coffee shop looking for a space that has great demographics, great access to traffic, and other draws that they can benefit from, no other property here really compares to that. And I'm sorry if I'm going faster than some of you guys can follow as I'm going through these options. I've been to all of these buildings here. You know, you can look at the tenant mix. If you guys want a report, I can send it to you so you can see the actual tenants here. But when you see all local tenants, that means that they're just, you have to work 2 times as hard to get the traffic that you need. Okay, so to sum things up, the properties that you see here, all 56 of them within a 3 mile radius, it's obvious that a lot of these properties we would not choose because they're not on major thoroughfares like Westheimer or West Park Tollway or Richmond. The majority of these are kind of off the beaten path a little bit. So these wouldn't be applicable for our type of client. But for our specific use, which is a coffee shop slash restaurant, for our size requirements, for the demographic requirements that we really need to be in this area on these streets. Okay, and so for that reason, the properties here, our pick is by far the best in this area. Now, when we look at different markets in Houston, you know, then that's another discussion, right? So that's just a whole different discussion entirely, and that's going to be a whole nother long video that I would do if I were to just talk about every single market in Houston. It's almost too big to compare all of those options at once. But I hope this information was helpful. Again, if you want information on the market here, any of these properties, what deals are going on right now, just give us a call, talk to us. We love talking shop about the market. Thanks again for watching.